folks, Scott here, and this is the wrap for Tuesday, October 29th. So, a historically unusual day, as you may already know. And we'll talk more about that in a moment, but let's talk about what tomorrow may bring us. There are different ways to look at Fed Day, which tomorrow's FOMC policy announcement day. The Fed has been meeting, and they'll announce the results of their decision tomorrow. It tends to be a bullish day historically, though not always. And in general, buying down gaps has been good historically, and shorting up gaps has been bad historically. But I thought I'd show you the results of fading gaps on Fed Day after I tested just now in our trading room with our members, the 50, the 20, and the 10, and the sample size is just small. It's a little bit rare to be putting in recent highs right into Fed announcement, but that's what's happened. So to keep the sample size as big as possible, I'm going to show you the results of fading gaps on Fed Day after a 5-day high close, which clearly this is even a 200-day high close. 5-day high close in Fed Day. Go over to my Gap Trader workspace. And there you go. It's only happened 13 times in the past 10 or 11 years. And a little bit surprising for you may be that up gaps are actually tradable. So yes, I have shorted up gaps on Fed Day, but never more than half position size. One, especially for up gaps, or for up gaps, because of the general increased risk for shorts on this day, but also because you have to remember the Fed announcement occurs most of the time around 2 o'clock Eastern, and you have to close out, or I choose to close it. I think most prudent people trading leveraged instruments like the futures would, but also we've had some announcements that have occurred, say at 12:15 and 12:30. So to be conservative, I'm assuming you had to close out by noon. So you just generally have less time to let the trade work. So that's why. But an up gap, certainly on a terribly small sample size, not enough to trust, but enough to give us some insight into, or some reason to not be as fearful of shorting up gaps under the current situation. That's what it gives me. And down gaps using end of the day stop have made a little bit of money as well. What's interesting to note to me is that you shouldn't expect much of a gap either way tomorrow. Now, there have been some big ones, but after a 5-day high close, there certainly hasn't been any big ones. So I'm not expecting much of a gap tomorrow, but we'll see. I'll be prepared if we do, and I probably will short an up gap if the gap guides are supportive, which I expect they're going to look very similar to the way they've looked the past couple of days, because this market just continued to grind higher. All right. In fact, let's look at that. We've had 3 consecutive 200-day high closes. That's generally a very bullish development for the markets. Not bullish, but profitable for fading gaps in either direction. So the past 3 days have closed higher and above the prior highs, and just bulls are totally in charge. And the pros on Wall Street are masters in not selling until they have to. So until you break the trend line, get some unexpected event, I mean, honestly, you could go to 1800. As crazy as that sounds, we could go there very quickly. I'm just saying, all right? Do I think it's going to happen? No idea. So today's gap did not fill. We'll end up with another unfilled gap right here. It did come within a point, though, so actually, depending upon my settings here, sometimes I have this set to 0 ticks, sometimes I have it set to 4 ticks for this particular indicator to show an unfilled gap. So we'll see what tomorrow shows there. But let's look at what the guides showed going into today. First, I'm going to start with the worksheet, which is an average of the 8 individual gap guides applied to the Russell, S&P, Dow, and NASDAQ futures and ETFs for basically probabilities at a glance. Log in very quickly. And on average, for gapping above the prior highs, this was a very good setup. Not as strong as we've seen recently in some cases, but still pretty solid. And you can bet your bottom dollar I'm going to be trading this. 62% historical win rate, profit factor 1.44. It's made 44% more in profits and losses. So again, today people were surprised this one didn't work. And here's one hint. It's a UH zone. You open above the prior highs. Odds in general to gap fill are lower. Unique day factors, day prior to Fed Day, generally slightly attractive there. No unique patterns in play other than what I commented here in my pre-market comments. And last night's wrap I talked about, and somebody even, well, not joked, but I'm sure there was some seriousness to it that I had jinxed the market today, and I wish I could say I was that powerful to control and move the market and disclose little factoids like this that moves the entire market, but honestly, I'm not. You'd be fooling yourself to think that I had that much influence. The quant jocks, the rest of Wall Street, they know most of what I know as well. I'm just trying to arm you, the retail trader, with similar information and to piggyback what the big money is likely to do. And it didn't work today. In fact, you can see last night's rep showed 22 of 22 using an end-of-day stop had filled, and using MTG stop parameters 20 of 22. Off the chart numbers, very good on still a little bit weak sample size. But as I mentioned in last night's wrap, I mean, you just got to trade these setups. The guides were good. There were no other major risk factors that I identified, which, by the way, if you did identify something that has a large sample size that I did not consider, please email me. If you're a member, I'll give you extra member time. That's one of the ways I learn, and I'll certainly share it with the group as well. So basically, you have attractive gap guides. Other factors are mostly positive, really nothing else in play to worry about, again, that I've noted. And I said, as long as the gap is at least 1 point and the other three features gap in the same direction, then I'll fade the open with a slightly reduced position size, 1/2 to 3/4, depending upon the size of the gap. Because when I post these, I start writing at 9:10 a.m. Eastern Time and post it around 9:20. I don't know exactly where we're going to open. It could have been a 1 point gap today, or what do we have? 5 point gap today, so 4 point gap. So the markets can move around. And what was interesting today, the bigger the gap, the bigger the position size was the general thinking. And I meant within reason, of course. And I didn't think we'd open above 40% of the 5-day ATR, though we came close. And if opening the year channel, I'll use slightly bigger stop. So I went short of the open, 6 points. Stop was filled in the ES with 1 tick below the official open, so it was filled short at 1761 1/4. Bounced around and then rolled over and looked like we would get gap fill. It stopped 3 stinking ticks from gap fill. My target was 1 tick in front of that, so it missed my target by 2 ticks, triggering my proximity rule. Proximity rule allows me to tighten my stops, so the trade essentially works. Today's trade essentially worked, right? In fact, it filled in the Russell. It filled in the NASDAQ. It didn't fill in the Dow, and missed it by 3 ticks in the ES. So I tightened my stops to half, just a tick above the high at 64 1/4. I was stopped on that around lunch for -3. I took the other half and tightened to 65 1/4. There was a technical level up there, and I got stopped for -4 there for an average of -3.5 points, and really thought this thing was going to roll over and at least finish with a doji today, because my mechanical system and some of my other accounts, I don't really manage my stops because I'm not watching them. I've told many times before, my proximity rule is a more of a psychological management technique for me, to allow me to sit here and monitor my trades closely and watch them. I tell people all the time it's better not to watch them. But bottom line is, my proximity rule did save me some money today. But I felt your pain on my other accounts, believe me. So today just didn't work. No, we did not get 23 out of 23 consecutive trades. Not the first time. In fact, we've broken a few of those similar type probability statistics over the past few years, ever since the Fed started buying everything up. So there you go. It was a tough day in the markets. Nothing really favored. The high breakout was favored a little bit on the 15-minute guides as well as the first hour guides, but nothing worthy of a trade in my opinion. So I just babysat my trade all day. Actually, I was out most of the day, but came back in the day to see the bad news, and tomorrow's another day, so we'll see. Market's definitely getting stretched. We'll see if it's got one more day of juice in it, and maybe tomorrow Fed Day will cause a blow-off top to occur, at least for the short term. So we'll see. And there you go. That was my day, and that is the wrap for Tuesday, October 29th. Have a good one.